Welcome to the Capital Spreads weekly update. Today is Wednesday the 13th of July 2011. This week and the end of last week has seen volatility severely spike. Markets have been seesawing quite dramatically, and just when you think that things the world is going to end and Armageddon is around the corner, we reverse losses and try to regain levels back towards the highs. So there's been a serious spike in volatility, and just today, even in today's session, the trading ranges are pretty wide. So we've done well to recoup earlier losses in the day, a day that started well on the back of some good Chinese GDP data. We then gave up those losses as a bit of nervousness over European sovereign debt re-emerged. Earlier in the week we had concerns about Italy, we had Ireland of course reduced to junk status, and those concerns continue. But just this afternoon the Federal Reserve Chairman Ben Bernanke has hinted of the possibility that there might be further quantitative easing, so QE3, and that really lifted the spirits of investors, and we ended up back above 5,900. So that's where the FTSE is at the moment, just around there. The Dow at 12,600, and it's also meant that the dollar has weakened quite a bit, 141.70 for Eurodollar, for cable 160.80. But the biggest move, really, the most significant one, has to have been gold, which again has hit another all-time high. It's at around 1585. The risk appetite has also benefited crude. Brent crude, it's back at 119. So a distinct shift back towards risk, but yet to see the FTSE back above 6,000. How are clients playing this? Well, it's very, very difficult. This short-term volatility has meant there really isn't a particularly overall picture to paint you as regards client positions. Still, on the whole, remain relatively bearish, and that could continue if we see further strength towards the end of the week. So what have we got in store for the rest of the week? Well, we've got US retail sales, and they could possibly rise a little bit. Of course, petrol prices across the globe have fallen, so it's expected that possibly the consumer has gone out to shop a little bit more, so maybe retail sales might just rise a bit. And then we've got inflation numbers from the US as well. It's pretty difficult to determine where they could end up, but of course oil prices have been a little bit depressed, so we might see a dip in inflation. We saw a dip in inflation earlier in the week from the UK, and also from the US we've got Michigan consumer confidence, and that too is expected to rise a little bit. So plenty of data to get our teeth into, and also the continuation of the US earnings season. So the theme of this week, well, it has to be the spike in volatility, but there's two main themes as well as that stand out. Firstly, the BSkyB bid by News Corp and the fiasco over phone hacking is something that will remain embedded in not only the public's mind but investors' minds for a very, very long time to come. News Corp now have officially withdrawn their bid, and that has caused BSkyB's share price just to recover back above £7, but of course it's lost some third of its value in the last few days. And the other big theme, of course, is Italy. Is there any chance that contagion within the Eurozone could spread to the Eurozone's third biggest economy? Well, it seems like a very long shot. Italy has a history of running large debt, and that continues to be the case. But if they can follow in the footsteps of other European countries by introducing austerity packages, then that should be averted. So that's it for this week. As ever, do give us feedback, media@capitalspreads.com.